Hello and happy Monday, July 13th. I'm Kevin Davitt and this is Volatility 411. Now the broad market is moving higher yet again as the S&P 500 futures pushed back above the 3,200 level. After a 1% jump on Friday, the SPX is up another 0.8% this morning, and the VIX index is mostly unchanged around 27.5. It's worth noting that Cboe is expected to launch trading on Mini VIX futures next month, pending regulatory review. The Mini VIX contract will be structured like the standard VIX future, but with a 100 multiplier instead of a 1,000 multiplier. In other words, it's 1/10 the size of the standard contract. These contracts may provide greater flexibility and precision in volatility risk management. These may be appropriate for some CTAs allocating to smaller accounts and perhaps sophisticated individual traders. However, with all market tools, particularly derivative contracts, you must understand the risks of that particular market before trading. There's a Cboe press release available and with contract specs and details for those interested. Now, moving back to the markets, this week earnings will swing into high gear. Q2 reports are, on the whole, expected to be the worst since the 2008-2009 period. But many companies have done their best to manage expectations going into this event. It's going to be interesting to see how the market reacts later this week. The VIX futures curve has taken on a fairly similar shape of late. It's upward sloping until October, at which point forward volatility expectations fall. The entire curve remains above the 28 vol level, which is very different than when the SPX breached 3,200 back in late 2019. So, Mini VIX futures are on the horizon. Q2 earnings will swing into high gear this week, and the SPX is moving into an area of potential resistance. That's Vol 411, and I thank you for tuning in.